details of their earnings. They reported that the price per vehicle sold was down. That's a result of this price war in the EV space with lots of competition. They reported that deliveries were down, and we know that demand for EV has been soft. And so the results aren't totally unexpected. Now, there was some good news in terms of guidance. So NIO upped its guidance in terms of Q2 revenues that should double effectively from where it was a year ago. And they also expect higher delivery numbers than they had previously guided in the second quarter. So there's some good news. They just got approval for a new factory in China. It'll be their third factory. It gets their capacity up to almost 1 million vehicles a year, which rivals Tesla in China with their Shanghai factory. So there's some good news, but it's clearly just a challenging environment for EV manufacturers right now.
Strategic, optimistic, and resilient. The stock market is on the rise, but not all stocks are following this trend. Some are struggling with low prices for various reasons, some general and some specific to the company. However, these low prices can present a great opportunity for investors to buy cheaply and potentially profit when the prices go up. The challenge lies in identifying which stocks are poised for a comeback and which ones will continue to falter. Wall Street analysts have built their reputations on identifying stocks that are likely to recover. Wall Street analysts are experts in spotting potential comeback stocks. Morgan Stanley recently focused on NIO, a Chinese electric vehicle maker. NIO stock has been pressured, but does Morgan Stanley see it as a chance to rise from the ashes? As of June 24, 2024, Moomoo analysts have rated NIO stock as a hold. They predict it could reach $6.14, which would be a potential gain of about 42.46% from their target price. This projection suggests a significant rise in the stock's value according to their outlook. However, Moomoo aggregates views from multiple analysts to offer a broader view of NIO's future. Remember, analyst ratings are just part of the story. It's essential to do your own research on NIO's financial health, industry trends, and market conditions. Can NIO really hit the $6.14 target set by analysts? What's your take? Share your thoughts and comment down below. If you enjoyed this update, hit that like button and subscribe for more investing insights. Morgan Stanley recently weighed in on NIO, a major player in China's electric vehicle market. NIO, which started in 2014, introduced its first production models in 2019. The company now offers 8 electric vehicles, including the ES8 SUV, the EC7 Coupe, and the ET7 sedan. 5 of these are SUVs, and NIO plans to launch a new sedan, the ET9, early next year. NIO is known for sleek designs and cutting-edge battery technology, targeting China's growing middle and upper middle class. A standout feature is their battery-as-a-service model. Instead of traditional charging, customers can subscribe to a battery swapping service. NIO has built around 2,300 battery swapping stations across China and plans to add up to 1,000 more this year. The company is also a leader in vehicle automation. They are testing advanced driver assistance and automated driving systems and plan to offer these as subscription services. In the first quarter of this year, NIO reported slightly over $1 billion in revenue. However, this was down more than 7% from the previous year and fell $70 million short of expectations. NIO also posted a net loss of 33 cents per share, but this was 6 cents better than predicted. NIO delivered 20,544 vehicles in May, marking a 233.8% increase from the previous year. Year-to-date, they've delivered 66,217 vehicles, up 51% from last year, with a total of 515,811 vehicles delivered since starting. Moreover, NIO stock has dropped 51% over the past year, but Morgan Stanley's Tim Seow sees this as a chance for investors to buy in at a lower price. Seow suggests that despite recent setbacks, the stock could recover, particularly if sales pick up in the third quarter. He rates NIO as overweight, which is a buy stock, and sets a high price target of $10. He predicts a potential 126% rise over the next year. Overall, NIO has a moderate buy rating, with 5 buys, 6 holds, and 1 sell. The average price target is $6.19, suggesting a 40% potential increase.
According to China EV Post, NIO is gearing up for NIO in 2024. The event will be held in either Shanghai or Beijing. NIO's Vice President of Intelligent Driving, Ren Shaking, will deliver the keynote. NIO in 2023, held on September 21, 2023, saw the launch of NIO's first phone, in-house developed chip, and SkyOS operating system. The second-generation NIO phone is expected at NIO in 2024.
Would you use a smartphone from an electric vehicle maker? NIO is posing this question again as it prepares to launch the second generation of the NIO phone. After the first version came out in September 2023, NIO is ready to unveil a significant update at Innovation Day 2024. Investors are questioning if branching into smartphones will provide the growth boost NIO needs. The electric vehicle sector is facing challenges, including potential new U.S. tariffs. If former President Donald Trump is re-elected, these tariffs could significantly impact NIO. Currently, NIO stock is down 0.11% for the day and 47% year-to-date. The market seems indifferent to the upcoming NIO phone update. The phone's main appeal is its integration with NIO vehicles. It allows users to control over 30 car functions, such as adjusting the air conditioning or activating seat massage. While the NIO phone might appeal to NIO car owners, it has less draw for others. The phone's price ranges from $890 to $1,030. Given the dominance of larger competitors in both the smartphone and electric vehicle markets, NIO faces tough competition. The NIO phone update is unlikely to have a major impact on NIO stock. However, there could be a short-term boost following Innovation Day 2024.
For NIO, we hope to keep the pricing of our brands stable. We want to provide more value to our users. We think this is achievable in the high-end market. But we launched our second brand this year, which is Onvo. We hope this brand can enter the mass market, the mainstream market, given its high price to performance value.
Like its peers, NIO's big losses are a direct result of its heavy investment in research and development and infrastructure. The electric vehicle sector is dealing with challenges, such as possible new U.S. tariffs. These tariffs could severely affect NIO, especially if former President Donald Trump is re-elected. Last year, the company allocated over 3 billion yuan to expand its infrastructure, resulting in 1,035 new power stations to enhance its charging and battery swapping networks. This year, NIO plans to add another 1,000 stations to further extend its coverage. Liu was well aware that losing money year after year would lead nowhere. He realized his company needed to show a road to profitability to keep support flowing from its backers. To show his determination, he set two major goals which were to steadily boost sales and, more importantly, optimize the company's profit margins. The company traditionally focused on the higher end of the electric vehicle market, but after considering the limited potential of that segment, which accounts for only about 10% of the overall market, Li decided to take NIO into a new lane with a multi-brand strategy aimed at more mainstream buyers. NIO recently unveiled a lower-end third brand, Firefly, which is still in the pipeline. Its first products are set for delivery in the first half of next year. On the other hand, Onvo will cater to the family market, while Firefly is positioned as a small car for the mass market. These products allow owners to swap out their batteries for newly charged ones at designated stations, saving charging times. They are priced starting at 300,000 yuan for NIO, 200,000 yuan for Onvo, and 100,000 yuan for Firefly. Moving forward, let's analyze NIO stock more. NIO's operating data showcases a clear upward trend in deliveries, culminating in a staggering 22,600 vehicles delivered in May 2024. This figure represents a monumental 260.47% increase compared to May 2023. This exponential growth suggests a significant rise in consumer interest in NIO's electric vehicles. Several factors could be contributing to this positive trend. Perhaps NIO has successfully launched new, competitive models, or maybe there's a growing shift toward electric vehicles in the market NIO operates. While the overall trend is undeniably positive, the data also reveals a sharp dip in deliveries for December 2023. Several explanations could be at play. Perhaps NIO encountered production issues or supply chain disruptions during that period. Alternatively, there might have been a seasonal fluctuation in demand specific to December. However, these kinds of scenarios highlight the importance of considering past challenges when evaluating a company's future prospects. On the other hand, earnings per share is a yardstick used to measure a company's profitability on a per-share basis. It essentially translates the company's overall profit into a value that relates directly to each outstanding share of common stock. The graph presented showcases NIO's earnings per share for the past 5 quarters. The negative values indicate that NIO has been experiencing net losses during this period. This is a common scenario for growth companies in the initial stages, where investments in research, development, and production capacity can outweigh current earnings. As mentioned earlier, NIO spent a lot on research and development, which can be one reason why its earnings per share value went negative. Consequently, the year-over-year growth rate column offers a ray of optimism. This metric shows the percentage change in earnings per share compared to the same quarter in the previous year. Though the earnings per share remains negative, the year-over-year growth rate demonstrates some positive movement. For instance, if the first quarter of 2024 has a year-over-year growth rate of 11.68%, it signifies that the net loss per share for the first quarter of 2024 is 11.68% lower than that of the first quarter of 2023. This suggests that NIO is potentially on the right track towards achieving profitability. The company might be narrowing its losses or even inching closer to positive earnings territory. Additional information, such as NIO's income statement and financial reports, would be helpful for a more in-depth analysis. By delving deeper into these kinds of areas, you can build a more informed picture of NIO's financial health and its potential for future success as it navigates the path toward profitability. Yes, Morgan Stanley views NIO's current downturn as a potential buying opportunity. Analyst Tim Seow forecasts significant upside potential and advocates an overweight rating. Despite challenges such as declining stock performance and potential U.S. tariffs, NIO is forging ahead with innovations like the NIO phone and a multi-brand strategy aimed at broader consumer appeal. Recent data underscores NIO's growth trajectory, with substantial increases in vehicle deliveries and strategic infrastructure investments. While the company navigates setbacks like quarterly revenue dips and ongoing losses, there are signs of resilience and strategic adaptation. This dynamic landscape challenges NIO to balance innovation with financial sustainability, striving toward profitability while capturing broader market segments. As NIO charts its course, investor sentiment remains crucial in shaping its future trajectory in the dynamic electric vehicle industry. But the question here is, can NIO effectively leverage its innovations and strategic initiatives to reclaim investor confidence and drive sustained growth in the competitive electric vehicle market? Share your insights in the comments below. If you enjoyed this video, you might also like our hand-picked, action-packed newsletter about NIO. Subscribe now at wiseinvesting.com. And that's it. Make sure to smash the like and subscribe buttons down below. Additionally, if you want to know about NIO stock, just click this video here. Thank you for tuning in, and stay tuned for more exciting content in the future.